In case you're just joining us, is the Money Show. Joining me right now is my guest, Rislanuddin Mohammed, the former managing director at Unity Bank. We're looking at the states of Nigerian banks. Of course, so many things to talk about. Welcome to you. And is it still appropriate to say Barika de Salah, even though it's gone?
Yeah.
Oh, it's okay, still, it's still appropriate.
Yeah,
Isn't
you
it?
can still say it, Baraka de
So
Salah.
Barika de Salah.
Thank you.
How
Yeah.
was your holiday?
It was fine.
It was fine, isn't it?
Yeah, I spent 5 days in Kano.
How is Kano? Of course, one of the commercial one of the commercial states in the country.
Well,
How is Kano doing?
I went to Kano, the state of festivities, so I couldn't see much of the business.
Oh, okay.
But there were really lots of people, and the good thing about it is we're experiencing a wonderful peace in Kano. All the celebrations were done peacefully. The Salah Daba was done, and
The Salah Daba was led by the Emir of Kano,
the
isn't
Emir,
it?
yeah.
Mohammed Sanusi.
Sanusi, yeah.
You know,
It was fantastic, really.
sometimes I find it difficult to place him in that emirship position. Anyway, but
I was opportune to watch the Daba
okay.
for the very first time since I was in high school.
That's nice. I haven't seen it anyway.
After I visited the Emir early in the morning.
How is it doing?
He's doing fine.
I think that Daba should actually also, it should be a tourist attraction.
Yes,
isn't
it is. It is.
And also generate revenue for the state.
And for the first time, some of the diplomats resident in Nigeria visited Kano and watched the Daba for the first time in as many, maybe 5 or 6 years because of the insurgency. I know the ambassador of Spain was there. That of it was his wife. That of Argentina was there, and the family of the Consul General of Sudan, Ethiopia, I think Pakistan. They're all there. Many that I cannot recollect, but they are all there, and it was done really peacefully, and we thank God for that.
That's nice.
Yeah.
Thank you for also giving me a report, a full report, because I'm taking you as a reporter now. Thank you very much. You know, just also before we went home for the holidays, Sky Bank, the management of Sky Bank resigned and all of that. The central bank took over, and some of us that had it were like, not again, please. Not again. Of course, the last time we heard about things like this was it 2009?
Yes.
Yes, the Emir of Kano now.
Yeah. Yeah.
Mohammed Sanusi.
Then Sanusi.
Yes, Sanusi Lamido. I still find it hard. I still call him Sanusi Lamido Sanusi SLS. You know, came up, Shawty Bank, Afri Bank, and all of that. And when we heard with Skype, we were like, not again. Yeah. When you heard that, what did you think? Of course, you managed the bank at the time. Did you hear snippets of it?
No, yeah.
Or do you...
No, basically, it's, if you are conversant with what is happening in the industry, it is not something that comes in as really surprising. Importantly, central bank do not wake up overnight to just say, I'm sacking a management of a bank, or I am withdrawing a license of a bank. It takes a long process. You see, there are 3 levels of examinations that central bank typically does. There is a routine examination, which is general, and there is what they call target examination, like maybe they want to check issues relating to money laundering or something like that. And then there is what they call special examination. Special examination is typically what is done like a stress test examination, typical example of what transpired in 2009. I think CBN did something like that last year. And it was reported that they have given notice to, I think, about 3 banks to recapitalize by June. And if you recollect, 2 or 3 years ago, central bank categorized some banks as systemically important. Banks that should not be allowed to fail because of their size, because of their importance to the economy, because of the level of depositors' funds they are holding. After the acquisition, Skybank's acquisition of Mainstream Bank in 2014, they were classified as such. So by so doing, the level of capital that Skybank is supposed to hold went up to like 15% capital adequacy ratio, as against the minimum 10% that is expected of some other banks. The big banks have to keep 15% because of their size, because of the fact that maybe they also have offshore branches or offshore subsidiaries, so to say, like banks that have subsidiaries in the UK and other African countries and elsewhere. So Skybank was categorized as systemically important bank. It should not be allowed, like most other big banks, it should not be allowed to fail because of the size of importance to the economy, because of the level of depositors' funds they are holding. So the eye on Skybank is typically going to be high. You see, a bank can survive challenges relating to capital, but a bank cannot survive challenges relating to liquidity.
A bank can survive challenges relating to
capital
and
over time. Yes, over time.
What's the difference?
Yes, because on issue of capital, the central bank can give you time to go and shop for the funds, but on liquidity, a customer,
it's an ongoing concern.
A customer cannot wait. You understand? On liquidity, a customer cannot wait. And when the central bank typically comes in and do this special examination, they basically look at three issues. Basically three. They don't go and expand and start looking for issues relating to money laundering, issues relating to compliance issues, and so, or staff issues. No, they look at basically three issues. One, they look at asset quality, which dovetails into capital adequacy ratio. Two, they look at liquidity. And three, they look at the corporate governance structure of the bank. I'm sure they look at all those things. I'm sure they look at the size of their portfolio, the capital, the depositors' funds they are holding, and the challenges they are experiencing. Some banks, it's very easy for central bank, apart from challenges with capital, it's very easy for central bank to note serious challenges a bank has by the time a bank begins to access what is called the standing loan facility of the central bank. That means there is a yellow sign that a bank has some challenges with liquidity. And lack of capacity to meet up obligations defeats the very objective of an institution, of a bank. So when a bank stays for a long period of time in SLF, it gets into a red sign. And the regulators must have gotten in touch with the management and the board, giving them time, asking them to improve, to go and do some marketing to improve on their liquidity. The time is not an easy one also for banks, because you have to look at the banks also within the context of larger economy. The economy is not really doing well. The last quarter report of the National Board of Statistics shows that the economy is has contracted minus 0.36%, and there is a likelihood that there won't be any change, notwithstanding the good policies that are coming up. They may not be able to be impacted. We may not be able to see the impact maybe until the beginning of
next year.
The fourth quarter, for example.
Fourth quarter.
Beginning of the fourth quarter. By the time there is adequate synchronization of policies, monetary and fiscal policies. But central bank, because of the larger challenges, issues relating to inflation, issues relating to the forex market, they change, the monetary policy change from accommodative monetary policy to tightening monetary policy, jacking the cash reserve ratio to 22.5% from 20%, jacking up the MPR rate from 10% to 12%. All those things have impacted on the liquidity of banks. Apart from that, whether we like it or not, Nigerian economy is a developing economy. We can call ourselves emerging market, we can say we are above, we are really developed, but we are a developing economy. And typically, developing economy relies heavily is a public sector-led economy. Public sector-led economy. The introduction of TSA, good as it is, has impacted negatively. Because of challenges, most banks ended up, because of lack of strong risk management structure, they ended up having challenges with funding mismatch. Relying on short-term funds, sleeping on short-term government funds, and lending long-term to make money. And suddenly, government asked for its money, and most of those banks got squeezed. There are banks, a lot of banks that got squeezed. But some can be able to absorb the shock, while others might find it very difficult to absorb that shock. I believe Skybank is one of those. They spent a lot of money, I think over 100 billion, to acquire Main Street Bank. And I'm sure that deposit became very difficult to be replaced.
Now, would you just say that is the reason? Because the board and the management were asked to resign by the Central Bank of Nigeria because they felt they weren't handling the issues of the bank well. And that also sent a lot of that sent panic into the system, into the society. A lot of people that are Skybank customers besieged the banking halls to get out their money. How would you say that the board and management of Skybank handled the affairs of Skybank, so to speak? Because you had the issues of non-performing loans that were high, issues of insider loans to themselves, giving themselves insider loans, giving their relatives and all of that, directors amongst themselves, and not also paying back. And if we will also take a look at this, it's not peculiar with Skybank. We know that some of these things happen also in other banks. It's just that they are not pronounced. It's when they have problem we get to hear the stories. Some of even the banking halls, the spaces or the houses they rent are owned by some of the directors. So and they are being paid from the bank. So how do we avoid some of these practices? That's one. Then the issues that actually bedeviled Skybank, the board of management did not handle it well. That's why the CBN asked them, please get out, you guys.
No, I'm not privy to the CBN special examination report on Skybank. This is typically confidential information between the regulators and Skybank board, and as well as its management. It's classified. But it is easy to second guess. It is easy to guess and extrapolate. Three issues I have earlier mentioned: corporate governance issue, liquidity, and capital. We can sit down and expatiate on this, and you can see we can agree here that clearly Central Bank is right. Skybank have failed on all those parameters.
On those parameters, capital adequacy,
corporate
governance, totally, so to speak.
So, and liquidity, they are chalked up. Liquidity, they are chalked up. Corporate governance, clearly there were challenges with corporate governance, and it is important for the regulators to be proactive in order to protect the depositors' funds.
Do you think the central bank is doing enough of that, actually?
No, they need to do. I think they need to do more.
Because at what point do we get to this level? If they are really conducting their examination well, and as at when due, we shouldn't even hear of this.
Like I said earlier on, if there is an issue relating to capital, which is typically a result of NPLs, bad loans, leading to erosion of capital, even if CBN is going to give you support as a bank, they will tell you clearly that you are now a weak bank, so to say, that you are not complying with prudential ratios. And if you are not complying with prudential ratios, I as a regulator, or rather we as a regulator, we are telling you to do the following. Basically two things. That is the first level of examination and the first level of support, remedial action. First, stop lending. Because you cannot lend from what you don't have. You don't have money to lend. Two, pursue recoveries. And on the aspect of liquidity also, don't expand. Don't expand. Don't acquire new assets until we get prior approval from us. If you want to lend from your recoveries. Pursue deposit mobilization. Those are some of the remedial actions that a regulator gives a bank before even a leeway is given to that particular bank.
Now, let me ask you this question, which is pricking me right now. Because if you take a look at some of the banks, of course, when they release their annual report and all of that, you see where the non-performing loans, their earnings, profitability, and all of that. How far do you think that NPLs, which is, of course, non-performing loans, are hurting the banks, so to speak? Because we've seen, or we are seeing, because it's still an ongoing concern, we're still seeing the non-performing loans, even to the oil sector, really impacting on the banks.
It will impact more. As at year ending, it was 10% average. It may be more if you look at specific banks. As against consistently being below 5% cap that the CBN has said from 2009. Largely, you can easily see where banks had those challenges. Oil and gas. Most of them have lost money. Most banks have lost money and have had no option than to make heavy provisions on those loans. Now, if you fast forward, when you operate in an economy that is halfway towards recession, you may find it difficult as well. Your customers may find it difficult to honor their obligations. Then you begin to talk about restructurings. There are certain rules of restructurings that, if they are not made, a regulator would not accept.
The other question now, you know, the other question is, in as much as we have so many NPLs in the banks, you know, the question also is, who are the banks lending to? Because there's still this agitation. You're smiling. It seems you know where I'm going to. There's still this agitation that banks are not doing enough, that banks are not lending enough to the real sector, to the manufacturing sector, to the larger society. So with what we're saying, so to speak, or even from the issue of Skybank, they are giving themselves the money, so to speak. So it's not getting to the ordinary man. So how do we address that, really?
Well, you see,
the central bank is trying to do that with different intervention funds from here and there, but the banks themselves.
You know, in the some years back, many years back, before some of us even joined the banking industry, like in the 70s, there were some regulations. Certain percentage of your loans must go to specific sector, to agriculture, to manufacturing. Those were controls that we try to avoid in a typical private sector setting. The whole understanding is these banks are private sector driven. So they push their business towards areas where they can make maximum profit, where they can be able to make maximum returns to their shareholders.
I'll come back to shareholders in a bit.
There are areas that requires joint support, joint effort between both the private and the public sector before private sector can be encouraged to lend, manufacturing, agriculture, for example. And the coming in of the intervention funds. Ask any bank. The intervention funds came from the central bank, but the risk was assumed by the banks. Ask any bank, what is the level of performance of those loans? Most of them are bad.
If the banks
most
are
of them
supposed
are,
to do
because there is a need for joint collaboration between both the public and the private sector and the organized associations of different sectors of the economy to beef up the level of risk management, the corporate governance structure of those organizations before you can be able to lend. Because if you lend, you are lending somebody's money. Even if it is intervention fund, you are assuming the risk. Before you release, that money is released to a bank, they must have pledged their treasury bills. So typically they are assuming the entire risk. The money, actually the cash flow, the liquidity does not belong to them, but the risk is on them as a bank. And most of them are also bad.
If the banks,
if
the banks are really taking their intermediation role seriously, would you even see the central bank come in more often, so to speak, with, okay, we're giving you money, we're giving power money, we're giving this sector money, we're giving this sector money. Perhaps the banks are also failing in their role. Don't you think that our banks need to have a different form of, or should not a different form, should do banking the way it is done, so to speak, with the removal of TSA now from the banks, which I'll come back to Twitter in a bit, because one of our viewers did say that federal government should reverse TSA policy to save Nigeria, to save Nigerian banks and save the SMEs. God bless Nigeria. That's his view, that the TSA removal has hurt Nigerian banks. But the question also is that it's government money. If government says, give me back my money, is there a problem?
No, whether TSA funds have hurt but the banks or not, the true situation is that the policy decision taken by the government in respect of TSA is right. Because you cannot be borrowing your own money.
And at the
it's a vicious cycle.
It's a vicious cycle.
You cannot be borrowing your own money.
Yes.
Having said that, I think the last time we were discussing issues related to
bank sacks
here, I did mention the fact that it is a shock that will eventually be absorbed by the banks. It's a shock because over time, most of those, not all the banks, luckily enough, not all the banks, most of those banks have relied heavily on public sector funds for their survival. Now those public sector funds are not there. Some of the, in part, reaction that we are seeing is in Skybank. They will stabilize. By the time they stabilize, and banks begin to do the real banking job that you are talking about, the real banking job, then banks will begin to look into their eyes. Banks will begin to focus on getting long-term funds like Tier 2 capital elsewhere, big funds that they can be able to lend, also lend long-term. They can be able to lend to the real sector. They can be able to support the growth of the economy.
Do you think we are seeing that already, that we are no more seeing armchair banking? Because before they will sit, no, their chairs are even finer than mine. At least you sat on a chair that is finer than mine when you were in Unity Bank. They will sit on the chairs, you know, very comfortably. Government will bring in money. Government will come and ask them for their own money also, and they will give out. So do you see that changing already?
No, of course the change.
Is it changing?
Of course it is. Like I said, some were already proactive. You see, this issue of TSA did not start recently. It started about 3 years ago.
Yes, it's not recent. Like 2012, actually, that was when it was moved.
3 years ago.
Yeah.
And I remember very well, when that thing happened, in Unity Bank, we did what we call, I was ED risk management then, we did what is called a pro forma balance sheet to show, take away those government funds that were supposed to go off in the first instance because they subdivided the withdrawal of the funds at that time based on that proposal. Take them away and see where you are.
Without the
government funds.
Okay.
Clearly at that time, all the banks that have done that can see clearly that there is a danger. And most banks became proactive since that time, even though they can also see clearly that the policy has come, one part of the government wanted it, another part do not want it. Okay. Federal Ministry of Finance at that time, with the central bank, they wanted it, the civil servant do not want it, and it never saw the light of the day until recently.
I must ask you this question, which you alluded to earlier, talking about the shareholders. What do you think should be the shareholders' duties and responsibilities at this time? Because it seems that if Skybank, the sky wasn't big enough anymore, so to speak, or the sky wasn't blue anymore for Skybank, and the shareholders would have come in before the CBN had gone in. Yeah. Isn't it? Okay. I say, you are not running our bank well, the books are not right, the shareholders have the duty to change them, but that did not happen. What are the duties of the shareholders?
I unfortunately,
and not just 50 kobo
and unfortunately, the structure that I'm seeing in terms of arrangement, you know, responsibilities of shareholders, we have not graduated enough for us to have that kind of an oversight function. First, as part of a corporate governance structure, each of the banks is supposed to have at least 1 or 2 independent directors. those independent directors are supposed to look at it, look at their books the way they see it, have an independent mind, independent opinion, and importantly, if they don't see things going right, they have a right to resign and to report the matter to the central bank. 2, by the corporate governance structure, the internal auditors, that's the first level of audit, those that look at the books on a routine basis, day-to-day basis of those banks. The internal auditors report directly to the board, not to the MD, with a dotted relationship to central bank. 3, there are external auditors that also look at the books of the bank at least twice in a year. Then there is the central bank that look at the books at minimum once in a year, and if there is an exception where there is a need for a special examination or target examination, they come in at will. Before you get to a shareholder, most of those shareholders, all they wanted when they look at the books of the bank, they don't want to look at read report about risk management. They don't want to read reports about corporate governance. All they are interested in is
how much is
the profit and how much is the dividend. How that dividend is cooked, how it is derived is not their concern.
And they clap their hands in the divorce.
All their concern is, even if they don't make the money, the management, not only the banks, I mean public companies in this country, they have a way of gathering a crowd with 1,000, 2,000 shareholders. There is no dividend, but we are okay, we are happy with what we are doing.
I think you've raised a very salient point, which I think I will look at in subsequent editions of the show in terms of, yes, in terms of how shareholders, because if, for example, the shareholders, we are at work, so to speak, the real shareholders. But if you even take a look at who are the real shareholders of the banks, that's a topic for another day. It's going to expand more than I'm taking it right now. But the other question just before we go is that, are Nigerian banks healthy? You know what, let me just quickly read. The NDIC annual report 2015 came out, because you know NDIC also conducts examination.
No, what they do presently is they do a joint examination.
With the central bank.
With the central bank, joint examination.
So they did bring out their annual report, and it's a financial condition on DMBs. The banking industry total asset grew marginally by 1.39%. Total loans and advances rose by 5.56%. Now, capital adequacy ratio, the banking industry capital base remains strong. The CAR, which is the capital adequacy ratio, was 17.66% in 2015. Now, if we take a look at asset quality, total loans and advances to the Nigerian economy stood at 13.33 trillion naira. I wonder where those monies are going to, which sectors. But earnings and profitability, the banking industry operated profitably, though earnings and profitability deteriorated. Looking at the financial conditions statement by the NDIC, one would just assume here, okay, Nigerian banks are healthy, though they still face some challenges because of the overall condition of the economy. But sincerely, are Nigerian banks healthy, and should there be a reason for panic? Should Nigerians panic? Because we have banked Nigerians and unbanked Nigerians. Should the banked Nigerians be panicky about the safety of their monies in the bank?
I think there is no cause for any panic. If there is a cause for any panic and there is a problem and the public are not informed, then we hold central bank to account. If the central bank comes out, which they did, and announced that all the banks are healthy, no need to panic, they became reactive rather than being proactive on Skybank to nip a big challenge in the bud, I think we should trust them. The data you have just read out, I'm sure is year-end 2015, 2015, and is an average. It's not bank-specific. It's a general overview, right? So they do not go into details of looking at individual banks. They may not be able to provide that kind of a general statement, assuming they are reporting about individual banks. But it is not healthy for a regulator to come out and be reporting about the general health of individual banks, because there are issues, like I said earlier on, that a regulator can manage.
But they will have the health of the specific
just a minute.
banks to themselves.
There are issues that they can manage. Like I said, they can manage a bank for a year or two, pushing that bank, asking that bank to improve on its capital.
Okay.
Either tier 2 or tier 1. But there is a limit to which they can ask a bank, go and look for money, improve on your liquidity, because the customer will be waiting. So we should trust the central bank and believing that the central bank were proactive on issues relating to Sky Bank.
Okay.
And then hoping that whatever information they have, if there is a challenge, they should nip it in the bud.
Okay.
The way they did, so that importantly, depositors' funds.
Okay, I think I'll stop you at that.
Are protected.
I think we would have another day to look at it because this is quite expanded. But many thanks for joining me on the program today. Just as always, thank you very much. I've been speaking with Rislanuddin Mohammed, the former acting managing director of a Unity Bank. We've been looking at the state of banks in Nigeria and, of course, the issue about Sky Bank. Of course, just like you heard him say, there's no panic. I also want to reiterate that. Please do not panic. It's still under control. So many thanks for joining us today. Please join us again tomorrow. God willing, like I always say, be the best you can be and be that change you want to see. I am Nancy Ilo. God bless Nigeria. Bye now.